to the Trading Market Technicals Morning Call video for Thursday, December the 6th. Another chop fest in the markets. Some interesting developments which I'd like to go over, one being Apple. Markets actually had a softer tone early on in the pre-market session. Did sell off in the early morning session around about 10:30ish or so. And then we had some news coming out on the fiscal cliff issue. And then markets liked the news, and we rallied up pretty much midday and then sold off into the close a little bit, but still holding on to a decent amount of gains. Dow up 82, NASDAQ down 21. That's because of Apple. Dollar actually had caught a small little bit, up 15, and the S&P up 2. So where do we go from here? We keep saying that question. Well, we continue to see choppy price action, and that's because of the uncertainty of what's going on with this fiscal cliff issue. And we'd like to have this thing resolved so we can move on and we can trade in a easy manner here, not worrying about what's going to happen, what's going to come out. And that's what's happening. As you can see, a lot of traders are getting chopped up. And one thing that I like to do is I take a couple of trades. If I get stopped out, I take a step back and see where this market's going. And with the market actually right now in a sort of in a shorter term time frame, weaker and headed lower in a short term time frame, I don't like to be reversing course and buying markets up when the markets are actually in fact lower on the day, and that gives me that 15-minute rule. I like to look at a 15-minute candle, and that'll tell me are we lower or are we higher in the day. And then once that market kind of reverses course and doesn't really reset itself, pretty much you're kind of time stopped out, because the markets you don't have enough time in a day to reverse course and start looking for short trades like we did yesterday. But anyway, let's go right into the charts here. Yesterday was a pretty long video, and I apologize, but I really wanted to get a bunch of key points out with Apple, gold, and I'm going to run over them real quickly with you today. So we have initial jobless claims, continuing claims. That's going to be big because we're going to be following up with non-farm payrolls tomorrow. So really keep an eye on that. That might just set the tone again for 8:30. We do have ECB rate decision this morning as well. Before the market, take a look at that with the euro. With the euro dollar right now trading at 130, so that's also going to be a factor in today's market reaction. Okay, so I want to run right into this thing, and let's take a look at the copper chart real quick, and I want to show you some of this. The copper, excellent if you're a bull in the market, following through. The markets really have been getting pulled back and forth, but once this thing digests, this is a good sign. If we can pull back right into these averages that are converging, this big area of support, then I think the markets will, I think the copper will run higher and actually at least retest the highs here, which will be a good bullish case for the equity markets itself. So now, speaking of copper, let's take a look at the dollar. Dollar did have a small little bid to it. Did catch that lower trend line that I drew yesterday, and our ratio chart here, as you can see, dollar versus the S&P cash. We are oversold here in our stochastics, and we are moving now. We broke back out of this little line area. So let's see if this hooks up. Again, if the dollar does catch a bid, remember, equities and commodities will sell off. Okay, now let's take a look at our quick NYMO. NYMO, nothing really new to tell. We are at the upper end of the range here, but we're not really overbought. So we could move higher, and or we could sell off, and plenty of room to the downside before we even become oversold. So that just tells me that there's really room on both sides here. Now, speaking of speaking of commodities, I mentioned yesterday about our seasonality chart, as you see from Zeal. I borrowed this from Zeal LLC. Really into a real strong time of the market. Right now, it hasn't happened, right? So this could be a really good sign to tell going forward. But I do think that the gold trade will happen. As you can see here, gold, this is the spot end of day, caught this 38% retracement, and it's just sitting on here. Now, if we do lose this, I think gold will get back down to this 50% to 1662. I'd like to really see it come down to this area, overshoot it, get the week longs out, and then we start rallying here, going into the end of the year and into January. But one thing I don't like is the price action in this GDX. And if you can see GDX, which is the gold miners index, when gold stocks are not holding up to the metal. Right now, the metal's holding up pretty well versus the gold stocks and the miners. As you can see, GDX is falling apart here. That tells me that the the gold bullion itself will follow suit, and that's usually what happens here, and that's okay. And I don't expect to be buying gold or buying any more gold or the gold miners itself, only because that once this bottoms here, we're coming into S1 support here. If this were to flush, which I would like it to flush, then I would be a better buyer of gold down at these levels here, the GDX, especially the GDX. But as the gold metal is holding its own, and I'll go back to gold itself, as you can see here, it's only a matter of time. If the GDX doesn't stabilize, gold will follow suit, will really flush out, and then that's when you want to be a buyer of gold. And I'll keep you guys posted on that. Another sector that I do like, which I don't have here, which I'm monitoring, is the coal sector. The coal sector had a major reversal yesterday, and I want to see this thing follow through. I have a bunch of coal stocks that I'm going to show you guys when the time is right for to jump in these coal sectors, which I'm really liking a lot now. All right, S&P 10-minute chart. As you can see here, bunch of chop, 3 days up, 1 day down, back up again, and then we failed again, and then just to come back into this channel. So this is a real chop fest, guys. Not a lot going on. However, the markets are going to either stabilize or sell off real hard one more time and then rally at the end of the year. That's going to give us a great opportunity. Still plenty of time to make money for December. Okay? Take a look at the S&P. And as you can see here, and I have a CCI. And this is something that I like looking at, some different indicators sometimes other than MACD and stochastics. And anytime it gets above 100, if you could see, 100, and then right above here, we made that lower high, and that really kind of put a top in formation, sold back down, came back to the 100, never quite made it. So this rally, as you can see here, was obviously not as strong as the rally here. And then again, failed. And we didn't even get up to this time. And now we're back above it. Right, but we'll look at the difference from these two here and here. Now we're back above it, but look where we are. We're really not even close to this area. So this is telling me this is a weak momentum is waning. This is a weak bounce up. So again, if the holiday season, the holiday trade kicks in, then I would see this thing start to curl back up and get back into that 180, 200 percentile. But as of right now, this is a big warning sign for me. Although we did rally yesterday, I'm very nervous the way Apple's trading, and if Apple really continues lower, which I'll show you in a minute, it could take down the rest of the market. I do like the fact that the banks actually rallied, and I'll show that to you in a minute. But anyway, S&P 500, 60-minute. As you can see here, we had that real nice positive divergence, which played out. And again, we're just sitting here on this bearish rising wedge, back testing this area here. So we'll see if this market does go lower. 30-minute S&P, I just like to look at the Bollinger Bands. As you can see, when we tight, we get a little bit of a push up, then a push down right here. We're tight here, we actually lower. So really no change here. We got a wide band, so not really telling us much of anything. Spiders, just want to show you with the volume. We had a decent volume day yesterday, no question about it. We're back into this wedge area, so we're sitting right on it, but we are below that 50-day, which we're having a hard time getting through. So if we do break through that, then we're going to have to worry about this long-term uptrend line, which is now resistant. So again, keep an eye on that. Look, guys, 140.30, call it 140 to 38%. Okay, that's going to be a big area for the downside. And of course, yesterday's high, 142.25. Those are going to be our ranges for the day that we're going to be watching. Inverted head and shoulders, Spider 30-minute, again, still valid. Our target's 145.25. So this is a still bullish configuration, still valid here. Transports, I like the fact that the transports actually rallied a little bit, and this is going to be something that I'm going to be watching real closely to see if we can get a breakout. If the transports breaks out, and then we have some strength back in the tech sector, okay, along with Apple starting to pick up a little steam, if that does happen, and the banks, then I think that we can have a real decent rally here. But right now, it sure doesn't look that way. But usually, believe it or not, the seasonal trade, the Santa Claus rally, really starts picking up steam sometime next week. So we'll just keep an eye on it. Diamond, same thing, guys. We have a bearish rising wedge into the 50. We haven't broke the 50, but we're above the 200. Nice volume. Again, overbought reading, but again, that's not a sell signal. Just keep an eye on that and just be cautious. Russell, watch the gap. Gap areas to be filled. We have 3 big gap areas here. Russell again dipped below that area of the 81.65, 81.32. That's that little gap area that's going to need to be filled. We did fill it yesterday morning, and then we rallied, but we still have some other gaps here to be filled down below. So that doesn't have to be filled at this moment, but just keep an eye on these gap areas. Again, bearish rising wedge, and the Russell here really moved quite fast, hard up in the last 9, 10, 12 sessions. Now we're consolidating up here, which is okay. This is actually a good sign. But I'd like to see this thing move back down to the 200 before I really get excited. Now, what's happening is, too, though, a lot of the crappy stocks in the Russell are starting to move. So that's telling me that maybe we might have that little short-term top and that we can get a couple of days. I'm looking for a 2-3 day sell-off really hard, and then we can buy into this market for the end of the year. XLF, big move, guys, partly due to Bank of America. BAC, big move up yesterday. Nice follow through the banks. Again, we got to get back above this long-term uptrend line, which is now resistance. So we're going to keep an eye on this. Let me just get that right back in here. So this is an area that we need to really watch out for. But again, very constructive for the bulls yesterday. All right, let's talk about Apple. And Apple's a big factor here. Now, I have the bigger, larger term head and shoulders. As you can see here, I put some comments. We had our how I saw the top on Apple was a weekly negative divergence forming on these moves up. As you can see here in RSI, stochastics, and MACD. Now we're looking at this possible. I'm thinking, is this a possible right shoulder? Well, not yet, obviously, because we never made it up to this area here. At least I wanted to see a 620, 623 move to set that right shoulder, at least at a bare minimum, if not to the 640, 650 area. But the problem is we didn't get that way. Now, if we continue to break this area here, this 513, which would be the low, if we take out, the 502, if we take out that 502 area, which would be a break of this first trend line, I think it's only imminent that we will see the 467 low in Apple. And then we need to reevaluate. Apple's having a tough time, and I'll tell you, this is the biggest one-day drop in a year and a half. And I've looked back, and this is a real bad, this is not a good sign for Apple that can't muster this move to try to get above it. Here's the daily chart. Now, we are sitting on gap area of support here, okay, the 528.90 to 539.90. A break below this area will test the lows, that 502 area, which is the 61.8% retracement back from the high. However, if we break it, we're going to be testing the lows again, guys. We're going to be lower, and I would say that 469 long-term trend line is going to be a big factor. It's going to play out. Now, this area here, we have major distribution selling yesterday. This is an ugly day. If you were long, you probably got stopped out. The 460 area below that 200, below that 20-day moving average. I would not be looking to get long. I wouldn't be looking to short either until we see some sort of another bounce. Obviously, if I'm shorting a stock that's in a downtrend, I'm shorting on any bounces, any weak bounces. I'm not going to be shorting in the hole. So shorting and buying here is really not the thing to do. Now, remember, there is a chance that they may issue a special dividend, especially the way the stock is acting so terribly. Maybe they might want to put an end to this downtrend. If they do, and if you're still long, that's a great chance to get out. I do think that Apple's going to have some problems down the road. So just keep an eye on that. Excuse me. This is going to be also plays a big role. The market's held up really well with Apple selling off real hard like that. But that doesn't mean that it can't reverse the next day. So really use caution out there. There's a lot of indecision in the marketplace here, so we want to really take it one step at a time. But there's a lot of money that can be made, so really be nimble, keep your palate dry, and wait for the opportunity to come. And that's where that's where we're going to make a lot of money in the markets here. Okay, all right, guys, real careful, be careful here with Apple. Watch what it does. Even if you don't trade it, it's going to be a good area, a good sentiment of what the markets are going to be, or what they're doing. And it held up well, but watch, because if Apple continues to sell off, I think it's going to put a damper on the technology sector, as you can see here in the Qs. Sorry about that. As you can see, we rolled right over the 200-day, and we're testing that 20. So big distribution selling, and don't forget also Apple is weighted in the S&P, so could put a hinder on that as well. Have a great day, everybody. We'll talk to you tomorrow. Take care.